Good morning, traders. Welcome to another live stream. If you are new, my name is Zach. This is Real Deal Futures. Before we jump onto the charts and bring on our guest today, make sure you read what's on the screen. Trading's risky. Most traders do lose money. I'm not a financial advisor. I don't provide financial advice. Nothing I say or do is a suggestion or recommendation to do anything at all. Make sure you do your own research. Make your own trading decisions. Read CFTC Rule 4.41 on simulated trading, which is what this is, even in funded prop firm accounts. And the affiliate and partnership disclaimer that says I stand to make money from links and codes in my content like Top 1 Futures, Code RDF, Bookmap, and others. Let's go ahead and take a look at these charts and bring on special guest Christian Williams, aka Decipher the Algo. What is going on, Christian?
Hey, how you doing, everybody? Yeah, just glad to be back.
Back in action here, man. Checking out these wild markets on a nice Wednesday, August 13th.
Yeah, it's beautiful out here. You see when you see broad strength across different sectors, different asset classes, it's going to be a pretty good day. We got Solana, Ethereum, those two markets been crushing it. And,
Right.
When we're trading NASDAQ or ES, those things are going to be heavily influenced by the same kind of factors.
Yeah, man. So you're mainly looking at NQ, or do you bounce back and forth?
Yeah, I got both up on my screen. I'll compare NQ, ES. Really just looking for them to be on the same page. Like, if you're trading, whether it's NQ or ES is your preferred, you want them to be doing the same type of action. If one's going up and one's going down, you're going to have a hard trade either way.
Yep. I feel that, man. I'm watching this market take off like a rocket, man.
Yeah.
So this is pretty gnarly right out of the gate, man. We've had, let's just zoom out on the 15-minute. I'll get a little analysis rolling, man. Obviously, I gotta kill Discord, which is buzzing in my ear. Hang on. There we go. Obviously, super bullish day yesterday, just continuing to blast through all-time highs. I'll even go out to the daily on this.
Yeah.
Looking at ES, man, this thing has just been really shot out of a cannon from these April lows. We did have a pretty gnarly pullback right in here. I think this was like the worst down day in US indices in a couple months. Like, that was looking pretty bad, but found some support right at the low end of this level, like the 62.50s in ES, and here we are trading all the way up 64.92s. So this thing is just looking super gnarly. Now the challenge, I think the challenge for us and maybe anybody else trading is finding a way in long, or if you're bold enough to try to fade an all-time high. Yeah, bro. I've looked at my stats. I try to review, right? Like, nothing too crazy, but I looked at my stats, and I do end up going for these reversion style trades. But my win rate on shorts over the last couple months has just been absolutely abysmal. Like, absolutely terrible, man. So I really and even yesterday, finishing out Power Hour, I was taking some shorts and just getting cooked, man. So I'm gonna try to avoid doing that today. Maybe we find a pullback, maybe we find a way back to VWAP, something like that, and I'm gonna try to find a way in long in this market. Otherwise, just sitting patient.
It's challenging. I mean, I look at July, just like you're saying, it's very hard to short. I was able to get some of the nicer shorts in this area. However, it came at a cost, so you have to really understand what's ahead of you if you're going for some of these trades. Where you currently stand, especially off of those August lows, like you're kind of talking about in recent time, that's just a short squeeze. Like, clear as day, it's a short squeeze. The dynamic of how price makes new highs intraday consistently, you're dealing with traders trying to short this because we get a couple down days. And it's like end of the world. Just kidding. Now we're back at all-time highs.
Right in here, man. And it's just a blast right back off. Yeah, so I think one thing I was reviewing a handful of different things yesterday after just a particularly tough day of trading.
Yeah.
But on the data side for me, I found I don't like to carry a bias. I don't like to say, like, I think the market's going to go up or I think it's going to go down, because that could play against you like really, really bad. But I do want to get better at saying, hey, we are in a just wild bullish uptrend. We're blasting through all-time highs. We've got consecutive bars breaking above prior bar highs, nothing coming back down to the lows. Why are you hitting the short button, right? Like, at the very least, like, let's be cautious about smashing that sell button,
I think you said it perfectly. When you have a few different layers going against what it is, and for me too, when I have a bias and I get very particular about things. So I find when I'm thinking a higher time frame move is going to happen, it will really just sabotage me on the low time frames because I can justify trying the trade because it's something that should happen, like based on structure, but it doesn't have to.
Hmm.
You know, if
Hmm.
the lower time frame isn't working in your favor, if you do not have VIX, which is our volatility index, if VIX is decreasing, price is going up. If
Hmm.
other asset classes are going up, or even if your like long-term portfolio is going up on that day, you see Apple making, I don't know, like 10% move or something like that last week. It's not
Yep.
a good time to short. And
Yep.
traders really me especially really get caught off guard when it's particularly strong or particularly weak markets because they're unusual. Generally speaking, markets like to go a little bit sideways. So when you have action like February, March versus now where you're a post April is just all up. So you had this very strong down and now very strong up. There's not much you
Yep.
can do. You just have to adapt to it.
Yep, and it's definitely yeah, really perfect explanation there as far as it's not super normal, right? Like
Mm,
where I seem to do well, I have a nice steady equity curve in normalcy where we kind of have some
yeah.
rangy, choppy
Yep.
conditions. I'm fading highs, right, with some
Yep.
shorts. I'm catching some liquidity when we sweep to the downside. But when we break out and trend in one direction all
Mm,
day, I'm often caught like hitting the sell button, trying to find a level where
yep.
we're going to kind of revert back down, catch a pullback. So I think that's really key. And for anybody listening in, when you find markets that are unusual, like just like Christian said, unusually weak or unusually strong, it's not to say we're only going to look for buys or sells or we're just going to smash the buy button right off the rip, but you probably want to be cautious fading that market, right? If day in and day out we're pushing the upside. And being honest, I really have not done that. I have not done that these last couple months, and it's something I'm working on. Got to adapt a little bit, either be a little more patient and say, I don't have a trade on this outside of a short, and I've just been getting absolutely smoked. So let me back off that. If we continue to push to the upside, it is what it is. I didn't find my way in long. Let me hang out. Because the other way is just paper cuts, death by a thousand cuts. So
Yeah, yeah, and the erosion of edge at that point, it becomes very difficult to number one if you're like you said, you're steady on that bias where I'm looking for the short. After a certain amount of time, your brain will naturally be like, "Well, I've tried to short this for so long and it's already so late that the moment I try to get long, it's going to reverse." Because,
mm-hmm.
and that's how the numbers work except in these markets. In
Yep.
stronger markets, you'll often get times where a market like it doesn't retest prior structure. Obviously for ES, I'm looking at it now. We're above Friday high. We dipped slightly below the midnight open for Eastern, that's a level I like to look at. So I like
Mm-hmm.
to look at basically opening prices. I think that's a very valid thing for people to pay attention to, whether that's the 9:30 open, the daily open at 1800, midnight
Mm-hmm.
open, which is about, just slightly after that. That's typically where you see a little more action that leads into what London might do. So when I
Mm-hmm.
see a dip below the midnight open, and it loosely correlates with VWAP on that chart as well.
Yep.
That area it's a pretty good spot to assume that we're going to go higher on the day because typically if you're going to go down on the day, you'd see a bigger push during that open ahead of London, and then you'd see the downward action. But we saw a nice little dip, and all from that action on the 15th, it's just higher lows,
Yep.
higher low. You have a little bit of a
Super strong.
consolidation. Yeah, so there's really nothing for it to do. Even on this 9:30 open right here, you had a dip down into that previous bullish candle right there.
Mm-hmm.
Yeah, that opening push is literally into a
Let's
15-minute
see.
fair value gap.
Mm-hmm. Mm-hmm.
Yeah, right
Yeah.
there.
Yep.
So it sweeps prior lows on the lower time frame. And
Right
then if
here.
you look at it on a 15, that's basically a 15-minute fair value gap. That's all fair value gaps are. They're just previous lows, but just shown on a different time frame. That's
Yep.
why it's a valid. So it's a strong push, consolidation, sweeps below, and now we're higher. So
Yeah.
NQ is
This
a little bit weaker. NQ is
let's take a
now
look at
below the
NQ.
9:30 open. ES is holding higher, so a bit of a divergence there. I'd keep an eye on that actually.
Yeah, that's interesting. I got an overnight low in the wrong spot here. Let me pull that up. Yeah, NQ is pulling back much more aggressively than ES still looking very bullish overall.
Yeah, absolutely. Overall, I would say for any trader, like newer to those ideas, opening price is a reference point. So if I'm below the 930 open, we're weaker on the session. Even you could use VWAP as something like that. But I typically like to look at that thing, the opening price, because that's the candlestick formation. So when this candle closes for the 15 in a couple minutes, it will be a bearish candle or a bullish candle based on where it is versus the opening price.
Yep. So I get sometimes I get questions on this, Christian. The VIX. I don't use it personally. Really, I got the Monster Energy rolling, man.
Yeah.
I gotta get my energy drink. I know it's early for you over there on the West Coast.
No, but, I didn't make coffee today.
Nice. But yeah, man, how do you use the VIX? I hear a lot of traders use it. It's something maybe in the future that I would take a look at, but I really have zero experience on it.
Right. So, it's a good way for me to explain objectively if markets are volatile or scared, or if there's fear in the market. It matters most for options traders, and that's my background. I came from trading options. VIX will change the pricing and movement of options a lot, but it is based on that uncertainty and fear. And if it's something worth noting, I would just set alerts on it. If anything, traders who have TradingView or Thinkorswim or whatever, I just set an alert. So if I see VIX spike, I know the market's going to be a little bit maybe sketchy, or it's going to be a little bit weak. It's going to sell off a little bit. When we had that crazy move during February, March into April, VIX hit like the highest level it had pretty much ever hit in like many years. So VIX got up to basically 6 times where it's at right now. So it was 6 times more volatile back then. If you guys were trading, you remember, I mean, we had 100-point candles on like everything, it felt like. So VIX is it's a way to measure volatility, and options pricing, even though we're trading futures, that will impact how the futures market moves a lot. Options activity is very important. I mean, you hear guys like Lucci talk about it all the time. It's like options kind of steer the market at this point. There's 0 day to expiration, and market makers are going to deal with basically facilitating transactions to not go against them by buying the assets, and that will move the price. So VIX is just a measurement, it's a barometer.
Nice.
And that's kind of what I like using it for.
No, super cool, man. I love having people on and just hearing the different tools that they use, different different correlations they use, just different things. I know that's one a lot of traders pay attention to. I'm pretty raw. I try to I try to add in things that I think will help me, but I'm really heavily focused on the chart in front of me.
Right.
And maybe probabilities that seem to play out, simple patterns that seem to play out, price action, market structure, volume, and then a little bit of order flow on my second screen. But I think more often than not, traders are using correlation. Like they are watching. You pointed it out to me, and now I can't pay not attention to it. NQ is breaking the low right now. Take a look at ES right here on this chart. Guys, take a look at NQ. So we got a nice. That's not quite where VWAP is because I'm on the 1 minute here. Let me fix that. But we're coming back down through the 930 open, the session low right here. So if you are utilizing that, if you pay attention to that, and then I think YM is still shot out of a cannon.
YM is real strong. YM is insanely strong today. RTY flat pretty much. So you have YM and ES just leading the show.
Yep.
YM is like NQ if it behaved. I don't know how else to say it. NQ is something else.
Yeah. NQ is a monster, man. So like I'm interested to see on a day like today. We got ES and YM pushing highs. We got NQ down here on its chart below the 930 open right now. Just cracked the low. Do we get a gnarly reversion and NQ just catches up and it was going to take everybody out that was getting long looking at ES and YM? Or is NQ going to be the leader today? We're going to start to see, some of the ES and YM follow. Like I'm looking at, again, I don't traditionally look at this stuff, but since you brought it up, I'm looking at it. The Mag 7 doesn't look particularly strong.
Apple's a little flat right now. Yeah, those. So anybody trading futures, if you're trading an index, you're going to be trading essentially the basket of stocks. I don't care to do it, but guys like Tanner will watch, whether it's the Apples or whatever high beta names, those stocks will likely lead to what the market's going to do. It's very hard for the market to be strong if tech is weak.
Yep.
Like very hard.
Yep. If those 7 are going to be red, it'd be
Yep.
unlikely that NQ is going to be really pushing through highs and having a nice bullish day. So yeah, again, man, I don't do it either. I don't know. I think I just personally, I think I probably struggle too much with bouncing between what am I actually seeing on the chart and then what am I seeing on,
Yeah.
whatever correlated assets. And there'd be days where you feel like a genius because I would start to rely too heavily, right? I'm
Mm.
anticipating the reversal and I'm getting aggressively
Yep.
short, based on Mag 7 not moving, and it would work out. But then there'd be
Yeah.
days where I just get cooked and I'm like, wait a minute, it's just higher lows and higher highs were pushing the upside. Why? Why were you just continually smashing the short button, relying too
Yeah.
heavily on this? So I think it depends. Wow, yeah, here we go on ES all the way up to 6,500. This is
Yeah.
going to be
Beautiful
interesting.
move. We're starting to see a little, as we talk about different markets, we're starting to see a little bit of a bounce in some of the, I call it's like an extension of tech. Crypto is an extension of tech, especially now that there's Bitcoin influence in the Nasdaq. So if you're unsure of why something might be weak, I would look at some of those. But today's climate, it's hard to justify a short just based on how strong everything is. It has to be tactical. It has to be short-lived too. You don't want to
Yeah.
go for those big swings. I mean, the amount of times that I've just walked back open profit and been like, why did I do that?
Mm-hmm.
Um,
Mm-hmm.
this isn't the market for home runs or trying to do all this crazy stuff. The best type of trading in this market is just level to level. It's stuff
Yep.
that we all know how to do, but we get away from our roots a little bit sometimes. Trying in the name of like growth, you'll aim for something that's just greed. So it's something that I had to keep an eye on personally a lot.
Yep. Yeah. Framing trade ideas. I know we are. This is all analysis because it's what's going on in front of us. But
Mm.
for me, looked at the markets this morning, was looking for a long play, maybe a pullback down towards VWAP, towards
Mm-hmm.
like the 6480s, even in ES, like the top end of this consolidation. Prior day high would have been really nice. At this point, shot out of a rocket. I'm not gonna look short on this today.
I wouldn't be. Yeah.
Traditionally, like this, around this 6,500 would be an area if we were not just blasting through all-time highs day over day and right into the
Mm.
open, that I would consider a short. We've got some liquidity that we just came into and filled here on ES, about 300 orders. But again, on a day like today, where for me, overall trend, market structure, price action, super bullish. It's lined up on order flow. Let me share this screen real quick. I can. I'm on. Yeah, here we go. Right through the 6,500s, at least trading a
Yep.
couple points above. But yeah, we're lining up with this volume data, looking really strong. We have a very positive CVD. We're approaching like the 10,000 mark positive on cumulative volume delta from where I anchor it on Bookmap.
Mm.
We've had levels above, and we just continue to come through. So this is one where if I was going to look short on something, I'd probably be like late to the party. I'd have a really clear
Right.
high that got put in. Maybe we come up,
Yeah.
test it, we get a double top looking, structure. We have sellers start to jump in, CVD starts dropping off really rapidly. I would need a lot to want to look for it today. And again, that's me trying to adapt, trying to adjust.
Mm.
Where I've been way too aggressively short. I've been way too aggressively
Yep.
short off
Yep.
of levels,
I'm like, I
and
don't even know why. I'm just
yeah,
it's not in my nature to be like, yeah, I need to short, but I'm like, it seems feasible, and you get run over a couple times. You're like, all right, well, now it's just a matter of like, just kind of, until it works, and then it doesn't
yep,
work, and you're like, okay, I just
yep,
wasted a lot of time and walked back open profits, and just
yeah,
close profits even at that point. As far
yeah.
as the short goes, I mean, you have 10 a.m. 10 a.m. statistically speaking marks a lot of highs or lows for sessions, but that's a statistic, not a guarantee. One level I kind of like to look at as well with a market like this. I guess I can pull my chart too if that's all right.
Yeah, sure. We can swap in and out.
Yeah.
Yeah, if you guys want to follow Christian, he is Decipher the Algo on IG across socials. What's up, everybody in chat? I didn't even say what's going on. Wolf, Aaron, Andrew, Dwayne, Sharky, Kim, y'all on Kick as well. What's going on? Mohammed, Cali Trader, what's going on, guys? Welcome to the show. Feel free, you guys got trading questions, throw them in chat. You guys know the drill. But let me go ahead and get your screen pulled up here. Hang on one second, brother. There we go. We got your screen pulled up there.
So we'll look at ES for now. I took off the overnight session just to show that if we do trade below this opening price, you have this overnight gap. That's an RTH gap. Basically, all you do is whether you're on top one, whether you're on TradingView, you just hit that. You just hit the little ETH button down here. But that gap right there, this is essentially action that could get traded through relatively easy because it's overnight volume. It's not as abundant as like New York session, for instance. That's the one thing I'd be considering. Also, as we're talking about this overnight session, I like to look at how it compares on the different time frames. So you can see that this sweep down here really did do a lot. If you go back through price data, you'll see that a lot of these bold candles, when you run back into them and push out of them aggressively, the trend continues. That's something that you can find pretty much anywhere on the chart. I mean, that's what we saw yesterday.
Yep.
Runs.
Yep.
You just kind of scroll back. You'll see this is a consistent trade. It's either going to dig into a previous expansion move or it's going to sweep a previous low. So it's either stabbing into, and you got to think what's happening when it stabs through this low. Someone's thinking it's market structure break and I'm shorting, right? And then it gets completely reverted. So that's what creates that frustration and that perpetual upward motion in the market. Markets are all about positioning. So if the market can trade somewhere where it makes traders believe that it's a good idea to get short, it's perfect for then it to reverse, because then you have that chasing effect, either trying to get out of the trade or traders trying to catch that momentum. So it's always never a game of value within the index, because it's nothing. It's not like something you can put on your shelf. It's a game of positioning based on your idea of value. So do I believe that this needs to go up or down? And that belief, when it's put into hundreds of millions of different trades, that's what creates this kind of action right here. So it's a mix. These markets right here, I always like to point out, when you are not sweeping a previous low, that's really hard conditions for me to trade in. I said the same thing about when we were back here going into this. It's just a lot of like highs that don't exactly get swept. You can kind of see right here. Mm-hmm. And we're dealing with the opposite side. So this, however, was, I feel like, a really easy long-term position to kind of get into that April time. But yeah, as it stands right now, we have about 5 minutes till that new hourly candle. And look at this daily chart. We're just up. We're above prior day high. Unless we start to see something below that 930 open, I have a hard time believing we're going to close below here. However, if we're under prior day high, you'd have to assume the short is in at least somewhere in that daily candle.
Yep. Yep. No, solid analysis, man. I appreciate the breakdown. I find the same. Like when we have that just kind of slow grind higher, slow grind lower.
Yeah, 1 minute.
I know. We got a nice pullback going right now, guys, on the 1 minute chart. NQ as well is putting lows for the session in, headed back down towards VWAP. So I'm, again, guys, I'm interested in trying buys today. This could be like all that we get on a really aggressive bullish day if we're going to continue to push to the upside.
Yep.
For me, I would like to see at least a sweep of like overnight high. I'm not a VWAP only trader, but today I would buy VWAP.
VWAP would be a good one.
Like if we have to slice through VWAP and we turn this into a bearish day, I will feel fine taking L's looking long. Like I'm okay with that, right? Sure, we could potentially completely reverse this, but watching structure, price action, watching this on Bookmap, this is nothing calling short yet. I would be really interested looking around that VWAP. I'm going to say like the 6486s to 6482s. Like if we got to pull back into that area, I'm going to look long on ES on this one.
I see you there. Yeah, I'm looking at this. This 15-minute it's going to throw traders for a loop. If we do close as a hammer, that doesn't, you got to think. When I first started trading, I thought I saw a hammer or a shooting star. Game over. It's time to short, go long, perfect signal. They can easily just close it higher the next candle. There's no rule against a hammer or a shooting star having to close a certain way and then have that follow through next. It's a probability, but that's it at best.
Yep. I think being focused on price action like that can be helpful. If you're really going to be a raw price action trader, but shorting every bearish bar on a 5 minute chart in a gnarly uptrend, like I've been there before.
Yeah.
And here we go with a little reversion. So NQ looks like NQ pulled all the way back
to VWAP.
Here.
Yeah, it was
right
a
back
pretty
to
deep
VWAP.
pullback. Yeah. I think it's right here. Yeah,
Yep.
VWAP, perfect test. That's honestly a
Yep.
perfect trade right there. So you sweep out a bunch of previous lows. You got to think anybody rushing into this trade for the breakout to catch up, they just get run over, which is it's good logic for the market to kind of stop people out. You know, if it's stabbing into an area that's like uncomfortable or if people are positioned awkward, I mean, I just look at how I would trade. I would buy into this. You know, when I'm first starting
Yep.
out, I think this is the breakout, like this little wedge right here or something. So if
Yep.
it cuts through, it's like I'm positioned awkwardly within the cycle of price. It's an easy trade for them to like stop me out, whether that's just a high frequency black box, just flicking it down to a level of interest, aka VWAP. Then it's like cool. I'm out of the trade for, and they have that liquidity.
Yep. Yep.
I
It's
mean,
a it's an
yeah.
interesting way to think about it, man. Yeah, I've been listening to a lot more of like Al Brooks and some of like
Mm,
the older school guys. I really enjoy listening to that stuff. I listen to those
yeah,
psychology books on tape and some of his stuff.
I probably
But
had to do it that way because reading that book, man, that was hard.
it,
It
yeah,
was
yeah,
so
yeah.
dry. It was like eating. It was like
Yeah.
literally eating paint. It was the worst thing ever.
The reading price action bar by bar, some of that one.
Yeah,
Yeah, yeah, yeah. No, he listen, I'm probably gonna go see Al Brooks in person
that's
at
awesome.
one of those seminars coming up because
Yeah,
I just think
I think that'd
like
be a super cool thing to do. I just think
yeah.
that book was so hard to read. It's nothing against him. He seems
Yeah.
great in video and stuff like that, but
I, I think
man,
I think the dude's like honestly a genius legend, one of the best to ever
mm,
do it. If you're listening, Al Brooks, I think you're great, man, and I hope I can follow along. But yeah, dude, even in the videos, it's a very dry,
mm,
very like straight to the point type of tone. But anyway, he has a similar way of explaining the why behind what's going on. Like he's
mm.
raw price action, like staring at a 5 minute chart type of
Yeah,
deal.
yeah,
But obviously, right from the book, reading price bar by
yep,
bar. But he does have that interesting way of explaining like what's going on, buyers and sellers, where stops are, where people are likely going to be buying, with stop orders, where they're trading with limit orders, and how that's going to affect the movement of the market. So, I do think in terms of that. I also just do keep it like super stupidly simple, where I look at
mm.
patterns that tend to play out without trying to get too deep into the why behind. But
Yeah. I mean, it's a double edged sword. You don't want to like outsmart the market, but you also have to. I call it just like it's a further order of thought, meaning people see a pattern and then it has to work. But a pattern in the wrong context technically should fail, right?
mhm,
Like if the daily is completely opposite to what you think it should be, maybe you're seeing a bullish pattern on this setup right here, and the daily is extremely bearish. That would
mhm,
be the perfect opportunity for that trade to fail. It just
yep,
would be. So I like applying that next level. Also, there's some trades that just look super, super, super obvious, and those are the ones that sometimes don't work. Whether it's just like a super sharp pullback into a level, probably will just fail. You know, it probably
yep,
will. If it's like a little bit more steady, and then you see it kind of base out, and then you see it like base out, and then it sweeps. I look at that stuff, and whether you subscribe to Wyckoff or ICT or whatever, they all talk about the same thing. The idea of knocking someone out of position. I mean, you can even read back to like the books that Livermore, wrote or that were written about him as well. The idea that people get shaken out of a position, it's not a new concept.
yep,
And if you really need to see it in action, go trade some crypto markets. You'll see a lot of those. It'll be a perfect consolidation at the highs. It sweeps above and then it just fails below. It will very rarely leave stuff super flat. It'll normally do
yep,
some sort of sweep. And you can see that whether you're using some sort of visual representation of it, or you're kind of just applying the idea that this is a game, right? And there's other players that are going against you and they want your money essentially. They're going to do stuff like that. And there's a number of different tools, but I always like to give it a little bit extra of a thought where what would it benefit the market to just leave a level like that?
yep.
Oftentimes it won't. It'll just take that lunch money and go.
Yeah, that's I try. So again, I try to keep it like super stupidly simple, raw. Looking at patterns that repeat themselves. But if I do have something in the back of my mind, and I say it like, what would the market do to piss everybody off? And when
Yeah.
I'm
Yep.
when I'm saying that, like, where are the stops, right?
Yep.
Where are people likely positioning themselves long and short? And oftentimes, again, like whether it's algos, whether it's just the nature of the market, whether it's
Mm.
just that's where the liquidity is, oftentimes we go to that spot, right? We take everybody
Yeah.
out with a sweep lower below lows before continuing the move to the upside. Maybe we sell off right here, we come back up, trade, a point or two above the high, and then completely start to dump, right? The markets do have those moves for whatever the reason is behind it. We can create a lot of narratives.
Yeah.
So I do try to think in those ways, like the max pain, like I've heard people call strategies.
Max pain is really it's a huge thing, especially in options, because there's positioning on both sides of a contract, of a price. The market will do whatever it has to do to make the most amount of contracts expire worthless, because there are market makers obligated to transact on those types of things. That's a huge part of it as well. Traders, I agree, they get so caught up in the why. It's like the market is pretty robotic. Doesn't mean it's like fake, but there are things where it's just like, okay, it's kind of like they'll just tag a level exactly like to the tick.
Yep.
And that's all I refer to. I'm not over here like, oh, this thing is, we're in the matrix. It's like, it's kind of predictable sometimes, a little bit.
Yeah.
That's it. But
no,
most of it, there's a natural ebb and flow, or just a rhythm to how price moves, and that's how we position. We have to find our spot within that groove.
That's it, man. I think on the short term, there's a lot of randomness, there's a lot of noise. Obviously that's why we don't have 100% win rates or even close to it. But over time, if you stare at the charts for long enough, or whatever tools you want to use, you notice patterns repeat themselves. You notice that there's that natural rhythm, and you can find yourself in with a good way to structure risk, right? And then maybe create a small edge from that. But yeah, man, they especially these days, the markets do like to have that. Where is the stop loss? I'm gonna go and tag that. I'm gonna fake everybody out 3 times and then finally catch a move. So I see some Wolf in chat goes, I thought Max Payne was a game. Yeah, Max Payne in the markets for sure, man.
Yeah. Well, and like you're saying, it's they do whatever they can to inflict that pain. I see a lot of traders talk about how this year, like, oh, ICT doesn't work, and I saw one very well composed person talk about it, and he's basically referring to the fact that style has gained so much popularity that it would be very, very, very crazy to think that there aren't institutions just doing what they can to kind of just flick those types of trades out of the market. I'm like, that does make sense, because I look at that YouTube channel and I'm like, wow, there's like, I saw this when there was like 200,000 subscribers. Now there's like 2 million or something. I'm like, yeah, this is a crowded trade. So there's elements of the market changing. I hope traders kind of pay attention to that. Every year, the market's a little bit different, just a little bit. It's not brand new. It will never be completely different, but there's just different tendencies. We came in with Trump this year, and it's been interesting. It's been interesting. We had some crazy action for sure.
A wild ride. There's I forget who it comes from. I think it's one of the market wizards, but there was a quote that I really liked. The first time I heard it, I was like, what the hell are these guys talking about? And it's the market's always exactly the same, because the market's always been changing. It was changing, 50 years ago, 100 years ago. It's changing today. And it's kind of this dynamic beast. And just like you said, like, it's the same in the sense of, the way that price action forms, the drivers behind things, but there is always this kind of dynamic, ever-changing movement. And just like you said, look at the market let's say September last year. We got close to that election, and then look at the Trump market that we've had with the reaction on tariff talks, just the really aggressive movement.
Historical levels of volume or volatility in that action.
Yeah, man. So I think you do have to be prepared for that, right? Definitely when it comes, looking at this start to pop a little bit back to the upside here.
Reacting. So it had this expansion, pulled back. That's all that is. That's all I'm looking at right there. That fair value gap. I tell people, if you had to learn one of those concepts, I think fair value gaps are probably the most handy, because unless we close under this broad bullish bar right here, it's hard for the market to go down. So.
Not a bad spot to be interested in a trade or look to structure risk, right? Yeah, man, I'm interested to see. I'm not sold on it yet. I'm again looking long potentially. Depends on how we get down there, right? I talk about areas of interest, but it depends on what happens. Otherwise, I would just set a limit order. But I wouldn't mind a long on ES around VWAP today. Again, I think it could be.
Yeah, that'd be nice. Especially if it looks like really, really, really ugly, this market, every single pullback that I've seen intraday that's very aggressive gets bought up almost instantly. So
right back up, man, back up, right?
We talk about win rates and obviously the need to adapt very early. And there's a couple of people that I have in mind when I'm kind of bringing up this point. there's what we think is edge sometimes isn't edge. Like we can observe some sort of phenomena in the market. If we see something happen, what we do about it really is what the edge is. So if I see those
Yep.
steep pullbacks and every time I think it's a short, but I see almost 100% of the time I lose on that trade, I have the ability to observe something that has edge. I'm just applying the wrong filter to it. I'm making an assumption that, oh, it's confirming my bias. That's wrong. I need to take, instead of doing that a handful of times, do that twice, be like, okay, actually I'm perceiving this the wrong way. So there is opportunity for very high probability trading. We just have to make sure that we're using the data the best way possible. And data is just, whether that's bookmap, whether that's raw price action, the way we observe structure and basically make sense of it, that's where the edge comes from. Because those sell-offs, I'm telling you, if I just bought every single one of those, it's like two steep candles on the 1 minute into some structure level, and then it just pops almost cartoonish, like how fast it'll get to to the previous high.
It's crazy,
That's an edge.
man.
That's an edge.
Yeah,
I've been looking at the wrong way, and it's
Same.
it's money left on the table. But ultimately, I hope you guys can kind of pay attention to what you lose on. Typically, will be an edge if you can rewire how you're perceiving it, because the context is obviously wrong for if you're trying to short that and it's not working.
Absolutely, man. And that's why I'm looking aggressively long on this bad boy in this market. Again, if you just look at ES, for example, NQ gets really wicky, but it's similar. ES, if you get those really aggressive dip down, and like you said, there was a key point in there, into a key level, into a level of area of interest, something you're watching, a VWAP, and it's a hard trade to take, right? Because you're getting a really big bearish bar. But if you can execute, maybe we fill liquidity, maybe we are below that level by a little bit. You get in with a wide enough stop. It can be a really good trade. But so that's actually exactly what I'm looking for. If we start to get bought right back up from here, we blast through the high. I don't have a trade. I'm not comfortable taking it from up here.
Yeah,
I don't have an invalidation point on this where I'd say like I want to be short until way lower. And even if I got long off of VWAP, let's say like around the 86, 486, 485 level, I would have a nice, I'm going to say like a 10-point stop down below. That's not even like insanely clean because I think we could, pull way farther back down. But I would start trying it. I'd be trying it there. I think probably a lot of people getting trapped right now. Nice, we've had a lot of these movements where we just take off in one direction off the open, maybe little pull back to overnight high, and we've had a lot of movement to the upside. If we come back down through that low, I think there's going to be a lot of stops there. Maybe not everything, but I wouldn't mind looking long around that VWAP, which is right now for me 64.86-ish. And low of the session, that 9:30 candle, New York session, is right at 64.85. Yeah, 64.85.
It's good confluence right there, I would say. Yeah, we're approaching it relatively closely. We're about 5 points off at the moment. I mean, we'll see how VWAP reacts. It's a good area. Like you said, ES, the volume is a lot more consistent. It's a thicker market than NQ. NQ is kind of full of air, and that's where you see those extreme moves. Another note on that, people assume low liquidity or low volume rather for the session means the market can't move. Just look at the overnight moves and you'll see sometimes they stretch out super crazy. It's because there's not a lot of orders happening, so they're very spread out, so it's easy for it to kind of just take off in one direction. That's why you see that with NQ. NQ has a lot less volume. ES is a way heavier traded product in actual trading. In prop firm tradings, traders love NQ because it is volatile. But NQ, it's kind of full of air. Like it'll kind of just gap around a bunch. It'll wick up all crazy. I tell traders, I'm like, do you think this level would mean anything if NQ traded there real quick? And they're like, maybe. I'm like, it means nothing. It can genuinely wick to the top of the screen and then go to the bottom of the screen in 2 minutes. It doesn't change anything until you start closing above areas. Wicks really don't mean a lot. Like they give us info, but not a lot actually happens there. If on NQ, if a wick's here or 10 points higher, no difference, same thing. It could so on NQ you almost have to have a little bit more leeway with how you kind of structure risk. ES though, it's very, very tried and true. I would say I learned trading indexes with SPY options, so it's a good one.
Yeah, I find myself coming back to NQ. A lot of what you said there, all of what you said there was valid, right? Even if you look at depth of market, right? You look at Bookmap,
Yeah.
NQ will have orders, like I'm looking at it, will have orders resting, like a lot would be like, a level of like 50 or 60 or 80 orders on the book, right? ES, we're
That was a
talking like,
lot. Yeah.
yeah, dude, yeah,
Yeah.
standout levels are going to have hundreds, two, three, 400. Sometimes you see 1,000 on the book. So it's definitely a different market. It gets really wicky. I'm looking at this thing still selling off here on ES.
Mhm.
I'm looking at trying it. I'm just trying to figure out. This is probably something that I'd want to get really wide with a stop on, because if we
Right.
are going to continue, I think we continue making this nice bullish day. We turn around and it's this nice big aggressive push to the upside. So a little
Yeah,
bit interesting
we'll
structured
see.
risk on this.
I see what you mean, because yeah, number one, it's like it'd be nice to get long here. You have a little bit of that displacement where it's like starting to push, but you
Hmm.
have this right here. So it's
Yeah.
almost one of those where it's like maybe you nibble, but it's hard to gauge those things. So we're approaching really soon. We'll see how VWAP treats us.
Yep. VWAP's going to
So,
be interesting. And again, not to say that we can't have like the super frustrating bullish in
yeah.
Asia, bullish in London, coming
Yep.
off of a super strong day, and we just sell off. We come all the way through to like, the 64.50s. We get back down below overnight low. Like that's possible. Anything can happen
Yeah.
in these markets. But
And
I,
NQ kind of leading the front on the downside to kind of
yeah,
reinforce your point. It's
pushing lower, right?
interesting. Yeah.
Yeah, pushing lower. I don't
Yeah.
I don't think this would be a bad play, like where ES is testing, because again, I don't usually take this into consideration, but now I am. I got it on a second screen.
Mm.
If ES is testing VWAP, right, finding some
Yep.
buyers off there, maybe it's NQ sweeping like that.
Yeah.
London open, London low down there,
Yeah.
prior day high, and we just get that buyers off of both of these areas. Now, kind of flat again, like since we're talking correlations, kind of flat across the Mag 7. We got Tesla's up 1%, Nvidia down 1%, Microsoft almost flat, Meta, Google almost flat, Amazon and Apple up about 1%, not super strong out of anybody. And then US indices overall, looking at the day, um, very, very bullish overall, higher time frame structure, but
Mm.
somewhat timid on that percent day change.
Right.
So, we could kind of chop around. We could see a little bit of a pullback down, but uh, for me, and this might be me missing the move right here with this overnight low, overnight
Mhm.
high getting tested, but I want to see VWAP and maybe down towards that open, that 930 open candle.
Mhm.
So that's what I'm waiting on, and then I'm cool getting long. If I have to take the stop on that, maybe I try something later on the day, but yeah, I'm not gonna find my way in short on this. Definitely not today.
So in a session like this, how many trades do you typically find yourself taking?
For ES, man, two is going to be pretty much it
Yeah.
for me. If I hop on NQ, I've been running a little bit different of an approach, lower risk. Essentially
Mhm.
very similar to what I do on ES, but just lower risk, higher frequency of trades. So,
Right,
like
right.
if on these accounts I'm going to give myself two trades of $500 risk a piece. On
Mm.
NQ, I'm going to be risking like $200 a piece. Maybe I'm going to give myself, 3 to 4 trades in a session where if I just get cooked, I'm down the total of one risk unit for what I'm doing on ES. So, I will, put a little bit heavier position on, maybe one mini, a little bit wider stop, 10 to 15 points on ES, looking for that larger move, but probably around the two trade cap. If I take two L's, that's pretty much going to be it. Back and forth on it, or a couple wins, just because the size of the stop, right? It take longer to play out. I'm usually not going to be just scalping for a
Yeah, that
couple
is
points.
true. That is true. That's one thing that both I've noticed, especially this year, just learning, seeing some stuff from you in Austin. The wider stops is something people should really kind of pay attention to. Assuming your analysis is decent, right? Whoever's out
Hmm.
there, you don't need a wide stop for the sake of having a wide stop. You need it so that structure can work out. I think when you have a wider stop, you allow for a wider array of outcome,
Hmm.
meaning you might not have the perfect entry, but if it needs to just dip one time lower and then go, you're still in the trade. There's no
Yep.
need to say, "Oh, I have to be right in the next 2 minutes or else." it's,
Yeah.
it's
Yeah.
it's okay
Yeah.
to let it kind of sometimes it takes a second. You
Yeah, I
know,
I do like it, man. I think just like you said, I think like you're either going to subscribe to kind of two types of entering and stop loss placement. Either you're going to get a little bit wider. You're going to say I got an area of interest and I'm going to give this thing room to pull back further, chop around, do whatever it's going to do before potentially continuing to my take profit or stop. Or you're going to get really tight, and the thesis is like, this is going to do exactly what I think it's going to do right here, right now, or I'm going to get stopped. And if you go with that tighter stop, I do think like a lower amount of risk per trade and allowing yourself more entries is reasonable, right? It makes sense. Like I watched Tanner trade quite a bit. You know, he's been on my stream. I know he streams nonstop, and that's kind of his his style. He will be able to take multiple paper cuts because he's risking a pretty small amount on the way to catching that really nice trade. But
Yeah.
Doing that, you can have frustrating sessions where it's like back to back to back to back stop outs, where maybe I still get stopped out, but I've essentially put one trade on, wider stop, wider take profit. And yeah, for beginners, for newer traders, I do think it gives you more room to work, gives you more margin for error with your entries.
Yeah.
You can be kind of off on that exact when you're smashing the buy or sell button. And if the trade, like you said, if your analysis is decent, if your trade thesis is decent, if that trade's going to work out, you survive a lot more of the noise. There's a benefit and drawback to everything, and I think it comes down to everybody's individual style and the way that they want to trade. But if you're struggling with a lot of stop outs and then the market does what you think it's going to do, that's a clear indication to like widen out, size down, and widen out. So
there's one trader. He's pretty unknown. I found him on Twitter, and he put up a pretty profound video that I thought most people would find value in. And the idea is, when you first start out, going straight 1-to-1, that's literally where you need to start, because the expectancy is going to be a lot more in your favor that way. Because if you don't know a lot, you want as close to like a coin flip as possible. And then once you start to figure out, okay, which way is the market skewed towards for the session, that's where edge comes from. It's the likelihood that your scenario plays out over the other. Where most people do the opposite, they try to crank the stop as tight as possible. And it's like, how do you know this much already? If you're starting out, you should allow for more of this natural ebb and flow of the market to kind of take you along for the ride. And I think nowadays there's a lot of info out there that traders should really prioritize what they're looking at. There's people who say you need massive risk reward. I've had massive risk reward trades. It doesn't mean a lot. I've had some risk reward trades that do not even make sense based on like a traditional, because you don't aim for them. It just happens, right? You end up risking $50, you make 800. You're just like, how did I do that? A lot of the times too, you don't have to have that tight initial risk. You have a wider stop, and then it gives you a tighter entry, and then you can add to the trade and crank the stop tighter, and then you still have the same risk. So I think that's a better option for people. Start small, start wide, and then add into it if it makes sense.
Yep.
That's probably one of your greatest strengths. My fiance was like, I was like, oh, if this trade hits here, then I'll be good. She's like, well, what happens if you add more to the position? I'm like, oh, you're right, I can. Okay, let me just do that. I added aggressively to the position, and then I only had to catch half the range for that same outcome. I'm like, I was just thinking that today. And I'm like, see, you'd make a good trader.
Yeah,
she had no idea. She was like, I don't even know why I said that. I was like, but that's the intuitive nature of the market. It's like when you're detached completely away, it makes sense.
You can just do what makes sense. Absolutely. It's so funny. I get those comments, and I hear people that like make comments, and I'm like, damn, that makes complete sense. And you don't know like you have hardly any insight into what we're really doing here. But when you take risk off. So I'm watching this thing pull back a little bit further here. Again, I'm going for that really nice aggressive entry around that VWAP level. This isn't a bad spot where we've really started to consolidate here off of overnight high. I would like that one dip down, and if we do it, I'm going to buy aggressively into it. I'm really not going to wait for much of a reaction. We got some liquidity right down around VWAP, the 87s, 87.5. If I look at Bookmap, 81 would be like all the way, 481 would be like, we got another 100 on the book down there. That would be a pretty deep dip below VWAP, but I'd like to find my way in long, if anything, on this, and got something getting ready to get set up, so we'll see. But chat, I see you guys chatting here. Juan, think it's gonna fill the gap, but not sure what happens after that.
Yeah. Could
Wolf.
happen. That's possible.
Troll comments over here.
Yeah.
Jess, good morning. What's going on? Dwayne, yeah, had some guys talking about all-time highs. Yeah, all-time highs are tough, man. All-time highs are definitely tough. It's an interesting spot to try to find targets to the upside for sure. If you have like nothing looking left, that can definitely be tough as well. I try to use Bookmap for stuff like that. Just give me a little bit of an idea if there's like no structure on the chart at all, for example, and we're pushing all-time highs. Maybe I'm looking at a level on Bookmap for something to the upside. But yeah, this thing's still selling. What was NQ doing? Let's take a look. NQ, yeah, still chopping below VWAP. And while we're hanging out, guys, I'm going to make you aware of this one. Let me go back, share this screen real quick. We got 55% off of top 1 futures ending this week, ends tomorrow. It's my preferred prop that I'm trading with here day in and day out. You guys want to check it out. Link is in the chat, pinned everywhere. That one ends tomorrow at midnight. I don't think we'll see another deal like that coming back for probably a couple months. Maybe Black Friday, Christmas, something around that time. But back to the markets here. Yeah, this is interesting, dude. Slow grind back down. I'm going to buy a dip here, but here we go. Back through VWAP. Filling some liquidity here. 81s, man. I'm watching this right here. Right off of VWAP is the opportunity.
Yeah, that's looking clean. You see that nice little reaction? I mean, it's super aggressive, but that's like you said, you know, it's super aggressive. You still have the session low right there. I mean, this is, we're talking about the overnight gap. You have that right there. There's a possibility where this is the move. I'm going to look at the other assets, see what we're doing. NQ, new low a day. VIX has been increasing this whole session. I mean, it's not a lot. It's really not a lot percentage-wise. Like, we're barely moving. But off the lows, it's about 2%. It's starting to push a little harder. Yeah,
I'm looking for a sweep below this level. I might wait for the 81s where we got a little bit of liquidity down there.
It could be a little early to try just yet. But I do like the idea that you're going on about.
Yeah,
I do think that makes sense.
I'm giving this a shot down here. Super aggressive. Again, if I got to take a stop, it's gonna be pretty damn aggressive on this one.
Order filled.
I'm in long on this bad boy. Let me go ahead and throw a stop wide. Definitely don't want $200 on there. That was from my NQ aggressive risk to reward scalping. So yeah, I'm going for buying that dip, man.
Yeah, it looks like it's going to be a pretty good opportunity.
I don't need, if you take something aggressive like this, you don't need it to be a huge movement. I'm just looking at stop loss placement. I'm going to drag this bad boy around. The low 80s, do have a little bit more liquidity down here. So 81 had like 100 on the book, 64.80. I want this on the sweep of session low. Waited patiently for this to set up.
Yeah,
we cracked through VWAP here, but we got the session low getting taken. This is my style of trade day in and day out. I waited to not get short. We're going to see if we can't catch the long here, but I'm long from, let's see, I'm long 1 mini from 64.84.5. I'm going to go stop a little bit wider than my 500 risk per trade. Still going to give myself another entry if I take a stop on this one. But we sell off through, like, all the way through this level. We get through this consolidation, and it's not just a sweep down here into, like, the 75s, for example. I think we're taking prior day high. We're going to potentially pull all the way back down further and really see some gnarly selling pressure. Maybe flip this bearish. Maybe it's just a super deep pullback that I can't survive. But this is going to be me trying it aggressively right around VWAP. So that's my play, chat. We'll see how this one plays out. See if this dip gets bought back up today. Let's see. Trader Julie Kate, the stack 5 still works. This message will self-destruct in a few minutes. Yeah, guys, for those of you that are interested, Top 1 Futures, you can use code RDF, or you can support Christian and use code Decipher the Algo, DTA.
Yep.
If you want to support either one of us, if you're getting some value out of Christian here on stream, show your support for sure. Let me throw his link back up. But what I've tried to not get yelled at by doing is you can use code STACK5, which you need to do. Head to the website, subscribe to the email newsletter. You get another 5% off. So you can use that. Trader Julie Kate, thank you for pointing that out. Lewis, I see selling pressure. LOL. Yeah, guys. This is a long that I'm looking at taking, again, aggressively on a pullback down. I'm not waiting for any kind of confirmation or for structure back up to the upside. I'm looking for this to continue, right? If we come all the way down through these lows, or this area consolidation I'm talking about here, into this area, we dip down below 75s. It's just too aggressive. It's not a buy off a VWAP trade. It's a sell all the way through down here. So maybe at that point, there's another trade for me later in the day. But this one I'm looking long on. Here. That's that's probably going to be my setup for this session here. If we sell off through this level, I'm going to be waiting to see if we come all the way down through like this overnight low. Yeah, I think we could go all the way back down to like the 450s, a gnarly pullback after this bullish structure. Come back in, fill the gap, all of that type of deal. But this is as aggressive as I'm going to get for now.
I mean, given the circumstance and the overall narrative of this action, these are the best opportunities in this market. Whether it works or not is just a game of probability, guys. So it could be a trade where, like they were saying, needs to fill that gap completely on the RTH. But, that's the point of trading. People think that everyone needs to decide the same thing all the time. No, it's actually good for people to have a short or a long. You want that. That's what makes a market.
Yep.
It's how people disagree about price that makes it move.
Yep. It's interesting to think that for every trade that's getting put on long, there is a seller. For every buyer, there's a seller. For every every tick to the upside or downside, you have traders pushing it both ways. So I'm looking at this bad boy aggressively long, right, on a pullback down, really a sweep below lows, and that's kind of my style on ES. I'm going to wait for an area of interest to get hit, somewhat counter to the initial price movement, right? Because we've been selling off really since that like 950-ish time frame. But to look for a really aggressive stop to say, like, if I'm wrong on this, I'm dead wrong. We sold way off through VWAP. After being quite a bit above, we had a really aggressive pullback down, and I'm dead wrong on the trade. And like you said, I don't know what's going to happen next on any individual trade. I try to stay in that series of trades mindset, right? I don't need to know exactly what's going to happen next to make money. On this individual trade, just got to let the market do what it's going to do. Real quick, looking for target to the upside potentially. I would be cautious around this. I'd be cautious back up around these like 64.90, 64.95 area. If we were going to continue lower, for example, that could be the pull back up, take everybody out, right? That's getting short, back through VWAP, and then a continuation lower. So I don't know that I'd hold on to make this one a home run trade. I certainly could if I was in with more contracts and maybe look to scale out. But I'd be interested up here for a potential target. So
I do like that level that you pointed out and the logic behind it. I mean, so I have a background trading volume profile. I'm familiar with all that stuff. But I also like the idea of that same level you're talking about. It's about 50% of the leg, and I like using fibs or different range measurements. And if something pulls back, even if you're wrong on the final direction, 50% is a pretty safe bet for any sort of bounce. There's guys like Trader Kane. He talks about that. He'll be like, okay, this is the full range you could trade. I only need that. And I'm only going to target that because more often than not, it will only do that. And I'm like, that's a better way of looking at it because
this
you want
is essentially looking at a 50% pullback. Like let's say we started to bounce here, right? We started to come back up. You'd be looking at essentially what the 50% movement is between 100%. Any. Okay.
You measure pretty much anything, whether even if that's a prior candle, like a daily chart, I'll use a 50% on sometimes. It's just ranges. People think a range has to be sideways, but really a range is just a candle. There's a start and a finish to it. That's a range. There's different terms like, of course you have a consolidation, but a range is a set of data. So that if this pulls back anywhere near 91, that's probably a pretty good spot to be interested in, at least deciding if you want to do something. I wouldn't
Yeah.
be so hoping for highs, needing it. It's like it could happen. And, I mean, in this market, we'll
exactly.
see.
But no, and that's the way that I like to think. I don't need to catch the full movement. And what's the saying like higher probability, lower probability is always tough. But if you say like what's the highest probability versus the more reasonable what's the lowest probability to the most reasonable probability? Well, in this trade, if we start to bounce, I think if we pull up to this area, taking profit there, is going to be your best bet. Taking profit close to the, the high would be less likely to happen, but could still happen. And if you say, hey, I'm going to wait for a breakout and fresh all-time highs, that's less likely to happen, right? You're asking for more out of the market. So I do like to think in that terms, and I'm going to have to pay attention to that 50%, 50% of like any one individual movement for a target or for a pullback. That's really interesting to think about.
There's and if you're trading options, especially, there's like a time element to trade. So you want it to happen fast. There's more urgency for it to hit, halfway because it's more of a reaction. It's a natural kind of reflex. For it to hit highs, you might end up holding through some randomness, quote unquote. It might need to consolidate before it goes. So it'll take longer. This could happen in 8 minutes. To new highs might be about 21 to 45. Like it really could take a while. Maybe it pulls, consolidates, pulls back, and then goes to highs. But then to hold for 6,600, it might take days. It might take weeks. So it depends if you want to hold through randomness, basically. And randomness doesn't mean there's no edge in it. It just means the market's just like right here. This is randomness. It doesn't matter. Before we tested VWAP, you had like 10 minutes of 1 minute candles right next to each other. That's random. There's no. Is it going up? Is it going down? Who knows? But
No, so we'll see. We'll see if I get a little bounce on this one. Didn't get the initial bounce after a sweep of the low. Again, stops wide for this because I want to allow for that 81s to get taken. I think we could find buyers down here if we have to push all the way down lower through my stop. Again, my invalidation point is where it is because if we come all the way down to this level, I think we got a really good chance of coming below all of this price action down here. And again, like maybe all the way down to the 450s. If not, maybe all the way down here. But I can't run a stop all the way down there. It's just not the same thesis, right? Then I'm targeting something, for a crazy move to the upside. So we'll see. Again, I got to take a stop on this one. I know here's how I always like to think of my trades. If I take a stop, am I going to be unreasonably happy because I did something that I wasn't supposed to do? Was I completely outside of my system, or was I doing what I'm supposed to be doing every single day of the week? And it's just one that gets marked under the business expense, right? Cost of making yourself available for the W. And this one, like I said earlier, happy to get long on this. If I have to take L's getting long, I'm starting to feel a whole lot better than taking L's getting short. I don't look back and say, dude, what were you doing? You were short 3 times. The market didn't even pull back. Like what was
not even a down 15-minute candle close or something like that. That's a good point. So with volume and stuff like, I guess my camera was blocking your volume bars on the bottom. I was like, do you use volume? And my camera's right in front of there.
Yep. I got the basic volume down here on the bottom.
There you go.
As well. Yeah. Volume profile, traditional volume, and then VWAP. That's really all I run on my chart. If I'd probably give up volume if I had to give up anything, but
I wish it looked better on my chart. I use it here and there. I know how to read volume, but you also know how to read time. Where there's going to be volume. What sessions are going to have more volume. So it's almost kind of implied. I know a lot of guys don't use volume with futures. I think it could help for sure.
Yeah. I like volume profile. I think like most of the stuff I have on my chart kind of overlaps. Like volume and volume profile, a lot of it's seen in the price action itself, but I think it'd be helpful kind of secondary. I really focus most heavily on the price action and market structure that's forming. And then the levels of interest that I have based on like objective stuff, overnight highs and lows, prior day highs and lows, and then, key areas of interest that I also find from Bookmap. That's kind of like secondary, where I'll have areas of liquidity as we start to push to the upside, as we start to sell off, where I say, like on this one, hey, we had quite a bit of liquidity right there, buy side as we came down. I think there's also probably going to be a lot of stops, right? That's just making an assumption. But yeah, just basic levels of interest. So yeah, we'll see on this one, man. Not finding buyers just yet.
Yeah, it's
Still kind of
meandering a
drifting
little
lower.
bit.
I gotta take a look at NQ.
NQ kind of in a similar spot, just lower on the chart, I think, a little bit.
Ooh, yeah, NQ. Again, this could be all right, man. I think NQ could be weaker today, right? We had to come back all the way down to that prior day high. We had to come down into that, London area, right?
Yep.
Find some buyers out of this one. It's a back to VWAP move on NQ. It's a push maybe back to that 50% on ES, but we'll have to see. Don't know if
15 starting to look better on ES. We're starting to get a little bit of that hammer formation.
Yeah,
it's still pretty early in the candle, about halfway, but it's starting to look a little better.
Let's take a little look. Yeah, man, we get to pull back up towards VWAP on this one. Not going to look too bad. But again, man, if we have to push lower on this, I waited patiently. I didn't look to chase this move. That's definitely not my style, is just buying the breakout first couple, opening range or anything like that. Didn't chase this move. Didn't buy the first pullback or anything like that. Waited for way down below overnight high. VWAP to get taken. Sweep down below. So I like this one. If I got to take the L, I'm taking the L in stride. But see if this one can start to get some motion back up here. Yeah, again, I wouldn't mind the 90s to 95s for a little bounce out of this. I don't have to catch the whole move. I saw a couple guys were asking questions. Let's see. Zach, can't give up the tape. Try it off the top. YM. Let's see what we got going on, chat. Somebody was asking me if I would average in. And no, I definitely wouldn't average into a losing trade. That's definitely not my play. It's not something that can't be done, but not my play. If I was going to be adding in, it would definitely be to a winning trade. Maybe increasing risk, maybe just adjusting it on the way up. Let's see.
Yeah, I'm very big on adding to winners. I think that's, most people won't. You need to.
Yeah.
Especially if you can, of course. Like if you're in profit enough and then an entry presents itself, why on earth wouldn't you? It's a free trade at that point. You can tighten it and you still have profit. You might lose a couple bucks, but you look to gain a lot more from it.
Yeah, it's a really it's a powerful move if you can. I also like it that it lines up with the opposite of what most traders do.
Yeah.
I actually posted a reel from I'm clipping some of the stuff that, from like legends that I paid attention to that I think other guys will like. But I clipped one from Dr. David Paul, who's passed. But essentially that was the thought process that, most traders will struggle to add into a winning trade, and they're going to take profit really quickly as soon as it starts to move in their favor. And they're going to do the opposite on the losing trade. They're going to hope that it comes back, and then they get the bright idea to start adding. Well, if it was a good price up there, it's a better price here and a better price here. And if you could flip that on its head, on its exact opposite, which would be, clip your loser or at least just take the stop out and then move on. And conversely, when the trade's working out, right, when the market's showing you that your trading idea is correct, you add risk on that. You could turn those winners into home runs, or just like you were saying earlier, you can just not need the market to move as much in your favor to capitalize on a nice W.
Yeah, that's the meta game, right? It's like the rules for the game change depending on the player, right? So if you're new to this, you think you're trying to do X, Y, or Z. Good traders are just trying to not make the same mistakes as like the newer traders. That's the real game. How do you do the opposite of the guy losing?
Yep.
You don't have to. Yep. You don't have to be the best. You just have to not make the worst decisions.
Yep. If you can flip what unfortunately the majority is doing that's causing losing trades, or even I've talked to a lot of guys, and I did this myself. If you have like just a really downward sloping equity curve, like you're a really consistent losing trader, and that's not like to be making fun or
we've
like
all been
for
there.
a long time.
We've all been in that position. You'll have periods like that as long as you go. You'll do something. We're talking about shorting when it's going up. It's like equity curve is going to do the opposite. So, like you're saying, right? Probably do the opposite.
How can I look to flip that on its head? And again, if you're and I think a lot of it comes from trade management, right? Like if you're ending up with just an exorbitant amount of losses, where if you were just flipping a coin with 1-to-1, you'd be way better off. I think it's worth asking yourself, what am I doing so consistently that is generating these losses? And if I completely flip this on its head, what would my trading look like? And, usually it's not just like the direction of trades or the entry. It's what you're doing after. It's because every trade, beginners, every trade that starts to move $100 in your favor, you're taking off the table, and you're holding every trade to $1,000 loss, or you're adding in and widening out stop losses. When if you had just done the opposite, clipped your losers really quickly and added into those W's, you would have that exact opposite, equity curve. So, there's a thought in that. Watch what you're doing, watch your results, look at your data. Unfortunately, the data don't lie to you, no matter how much we'd like it to sometimes.
Right. And it's always so clear. It's like, hey, this setup does not work for you. And you're like, but what if it does? It's you always will have that, like, you're like, I hear what you're saying.
Yep.
Let me go ahead and try it again. And it's like it like almost always fails. You're like, but that's not always. You'll do everything you can to justify it. That's how we are. It's your brain's gonna try to protect you from challenging your ego. That's it. But as a trader, you have to have minimal ego when it comes to making adjustments. Your data literally is flexibility is so crucial.
It's key, man. That's one of the biggest spots that I found a lot of success, right? Where I really started to make some progress. It was stopping the strategy hopping and trying to collect more data. And it was actually looking at what I was doing, right? Where was I applying discretion or not applying discretion? How was I managing trades? And how could I just improve what I was doing? And back to what we were talking about earlier, like starting with a 1-to-1, right? And this is, everybody talks about this. I recognize there's some flaws in this logic. Markets are not completely random. They trend. We have commissions, fees, spreads we have to pay. So there's edge that eats in here. But if you said markets are random, we have no idea whether it's going to go up or down. We entered with a 1-to-1 and at a coin flip, a long versus short. And we just let that play out, we would essentially over time break even, or maybe we'd be losing a little bit of money because of the things that we talked about. But if you could think about, you're starting from a break even point rather than where so many traders are starting, which is constantly wiping out accounts.
Yeah.
Think about how can we improve a little bit, either by trade management, either by risk to reward, or by entries, where we're placing our stops and targets, and just try to shift it a little bit in our favor. This like horrible, this horrible like big mountain that we have to climb back out from constantly losing every single day can seem a little bit more manageable. So I think that's a good way to look at it.
That scenario too, the more variables you add to it, because people will be like, oh, but what if the market doesn't move that much? Perfect. Your 1-to-1 needs to be smaller. That you can measure that. You can use the average true range ATR. That's a good example. You can also align it with a certain time of day. Say the 1-to-1, you go long or short on the flip of a coin at the 9:30 open. That's a perfect time where it's going to probably push enough one direction or the other to hit your target or stop you out. I mean, if you look at today's ES, it goes from the open, it dropped 4 points, and then it rallied, 10 points after. So even if you were short off the open for 3 points, you would have got your target today. That's a bit random. Whether it wicks up or wicks down, that's a little more of the coin flip.
But yeah, no, if you're struggling at all, I would go back to basics. I think that's always the easiest way to go, and not shoot for these insane risk to rewards. Look at what you're doing. If you're losing nonstop, I would really consider trying to flip some of what you're doing completely on its head and look at how that would work out. Why are you doing what you're doing, and how can you try to improve that?
It's like getting back to the drawing board, right? So, I mean, because you run a bunch, don't you? Like, what's your main thing?
Yeah, I run quite a bit, man. Training for the Chicago Marathon. Man, I got to do quite a few miles each week.
Have you always been into running like that? I mean, I did a little bit of track in high school, nothing.
Nah, a couple years for me, man. Couple years, and it's just been on a nice upward trending slope for how my running's gone. But you're still heavy into powerlifting, right?
Yeah, I was competitive for about 10 years. Powerlifting. I learned a lot through powerlifting, and part of that's like, if you ever have an injury or a setback, it's like, how do you start? You go back to the drawing board and do what worked before, but very little increments of it. I need to get back more heavily into it currently. I have a home gym. I have the full powerlifting setup here. It's just been super hectic since moving into this new house. But I think there's a lot of parallels with fitness and trading. If you know how to get to a goal, like I know how to squat 600. I know how to, whether I can today or tomorrow, it doesn't matter. I know how to get there. It's a process. It might take me 7 months to get back to that. I think last time it took me maybe 4 months, but you know, you have a certain baseline of strength that just kind of never goes away. But you had to work for it. You know, you had to learn. I taught myself how to squat. I taught myself how to brace. You know, when you're running, I'm sure there's certain breathing you have to do, or even, you know, I was running a couple months ago. I was like, holy hell, the way I move my arms really does matter. Cause I'm like, why am I getting like a shoulder pump? Like, what am I doing? So there's technique to all of it.
Yeah. I think there's a ton of parallels, the discipline side of it, but just like training for anything, right? Like I'm training for the marathon, you're training to squat. Here's a good thing we're talking about with the process and just, you know, how long everything takes. There's all of these little daily goals. Like today I got to run 4 miles, right? I got my training plan for, it's like 18 weeks. And then it's broken down to how many miles I'm going to run and what that marathon build is going to look like, all the way down to the day. And today, what I got to do is run 4 miles, right? Yesterday was 9 miles. I think if you can do the same in trading, right? Like maybe the goal, like for me, is a marathon in October, but we're constantly in trading just trying to go out and run the marathon every day. Yeah. We burn ourselves out, right? Dude. We get injured. We you know, we lose capital, and that's not how you would train for a marathon. It's what am I going to do for the next 18 weeks every week, and then what am I going to do every day? And for traders, I think it's stop trying to get the Lambo and the Rolex. Maybe stop trying to get that as a whole, but stop trying to get that every single day. Stop trying to hit a $10,000 day and prove that you know how to trade. Like, you probably know how to trade. You can manage risk.
Yeah.
Your job today is to watch the market, wait for your setup to come patiently, and then take that win or loss on the chin. Like that's it. And I think there's so many parallels to that with lifting, with running, with any kind of athletics, even with just like profession in general, man. You know, whatever profession you're in, the goal isn't the end goal, the finish line every single day. And usually that's months and years out there. You got to focus on what am I doing this month, this week, this day. And I think that can be really, really helpful to think about. So yeah, like I've gone farther than the marathon. I've done the ultra marathon thing. And
I mean, ultras aren't those 100? How far is an ultra?
So technically, I haven't done 100 yet.
Okay,
I've done a 50 mile. That's the longest that I've gone, a 50-mile race. But when
you drive 50 miles, right?
No, and I'm not some great runner. It's not to brag or anything. Like but the thing is, like,
50 miles, man.
Yeah, but here's the thing, right? Like, kind of like trading. When you look at it from the outside, you're like, how am I ever going to accomplish this thing that is so difficult? I can't get XYZ done. And it's the same thing, right? Like when I wanted to set out to do some of that stuff, that end goal is like, it's overwhelming. It's inconceivable how you're going to do. And you have to break it so far down into what do I have to start doing this week, next month? What do I need to do between now and 6 months? And then what does it look like a year out? And if you can just keep yourself on pace, and you're going to have setbacks, right? You're going to have, for example, maybe like injuries in running or lifting, or days where you just feel like absolute trash and you can't hit your goal that day. But if you just keep on that goal, that pace, right? Looking at your data. I think that's something that's really helped me with trading as a whole, man. Focusing day to day. And I know we're talking a lot of psychology, having a great conversation here. I'm unfortunately watching this trade drift lower. We came back up.
It really is kind of just sinking.
Yeah, man. I see on ES, if I look at Bookmap, we got a negative delta now. We've got 64.70s down past my stop level. I'm not going to do anything crazy. I'm not clipping this one. I want to see if we can get some buyers to step in here, but this bad boy is still drifting lower. NQ still looking weak. Unfortunately, we didn't get a bounce down here below VWAP. We didn't even retest VWAP before just continuing to drift lower.
Yeah, it's really sinking.
Just one of those trades, man. So if I have to take the stop out on the chin, which it looks like I might, I will. I'll be looking for another trade later into the session. Not the end of the world. I think on another day, this is a really nice pullback sweep down below the open, but just unfortunately not today. But for me and my trade management, it's not to do anything crazy, move stop loss up or down, add in, let the trade breathe. We come back into profit. That's where I start trade management. Or if we just move immediately into profit, that's where we start trade management, looking for targets, that type of stuff. So $600 on the line for this one. Manageable for me. I got to take it today. I've got to take it. It'll be what it is. But yeah, man, just not finding buyers on this. We started to look solid on that 15-minute. We got a little doji in here. This was looking pretty nice.
Yep.
This one's looking ugly, man. We might be pushing lower, potentially closing this one around lows. And again, if we do, just framing like the rest of the day, maybe a second opportunity for buys way lower in here. I'd have to see what happens as we got down here. But at that point, that would be a really nice extension down below VWAP, 20 plus points below VWAP after pushing all the way from the highs. This could just be turning into the uglier day. But we'll see. We'll have to see.
Yeah, given the tendency of the market lately, I mean, there is that opportunity for the snap reversal. I'm looking at NQ. I do see a little bit of a higher low forming on the 1 minute, which is it's slightly different than what ES is doing with a lower low, which it could indicate that maybe NQ wants to break that high, and then you start to see that upward drift. But those are just observations. That's not like me saying this is an actionable piece of info. It's just I see something, and that's what trading is. I like to describe trading as it's like bird watching, kind of, because you come in, you don't really know anything about it. Like that's how I feel. I moved into this new house. There's a million birds in the backyard. I don't know anything about birds, but there's a ton of bird houses, and I'm like, oh, that one does this or that, and I start to notice. I'm like, wait, how do birds build their nests? They hop around the grass, they pick it up. They'll be in bushes, like digging around. I'm like, what's that noise? It's a bird. So trading, you learn stuff about it by sitting and watching it. I know nothing about these creatures outside, and I'm like, that's how they do it. Okay, cool.
Yep.
Same with price action. How does this start to reverse? You sit here, you see, okay, it has to make a higher low, then it has to make a higher high. And you're like, cool, I'm learning something. But it's unemotional. It's not like you come in here and you're like, it has to do this immediately. It doesn't have to do anything. It could. It'd probably be nice, right? But it does not have to. It does not owe you anything.
Doesn't have to do it. But no, exactly what you said, man. You watch the charts for long enough, and you start to build that kind of memory of what's going on. We got a couple comments. Hit the likes, guys and girls. Smash the like, smash subscribe. If you want to go check out Christian, because I know we're going to get ready to wrap up soon. We're running like an hour and a half in. You want to check out Christian and what he's got going on. Decipher the Algo on Instagram and across socials. Great talk, guys, says Mel. Appreciate you. The stay in muscle. Emotions. Let's see. Try to locate. The stay in muscle, I say out loud, is the market telling me to get out or stay in, or is it my emotions? It's okay if emotions, but recognize it out loud. If the chart's saying, gotcha. Because we had Scott talking about, important to note, right? Like, what are you doing and why on the charts, right? What are you doing and why? Is it coming from a place that is objective and you're following your approach? Is it coming from just straight up emotions? I'm a sniper as well. Love the 5-minute close. Yeah, we're talking a little bit different talk today. You guys are chatting it up in the comments section as we were having a conversation on here. But yeah, guys, I'm gonna leave this one running as we start to get ready to hop off. For just to frame this trade, if we push down lower, it's gonna be the stop. I'm looking for at least I'm gonna say the 90s overnight high to the 95s if I was gonna get a profit target hit on this bad boy. But interesting, if we sell off lower to the downside, like I said, maybe chat, I'd be looking for something down into like the 65s to this overnight low level, the 64.60s. Interesting market, though. Interesting market. Really aggressive to the upside. Pull back down. Do we continue, or do we just continue selling off? So we'll have to see. But yo, Christian, appreciate you hopping on, man. Thanks for doing it.
For having me.
We'll absolutely be back on. Remember, guys, go ahead and check out Christian, Decipher the Algo. You want to support him on Top 1 Futures. I'll show you guys the poster again, 55% off. You could use code DTA if you want to support our boy Christian over here. 55% off. This ends tomorrow. Appreciate everybody hopping on. Thank you, guys. Christian, thanks again, my man.
Yeah, anytime. Thank you.
Talk to you guys soon. See y'all in Discord.
Take care.